Hi, everybody, and welcome to the weekly market wrap for September 15th, 2017. This week we had a bunch of things going on. We had North Korea launching another missile over Japan. We have a lot of people, including myself last week, being negative because we did not see new highs occur last week after it looked like we were making a lower high and a lower low. So let's start there. I was wrong last week. I kind of read this market a little bit off. I was thinking that the market was not necessarily. I didn't say it was going to go down tremendously. I just thought that it was running into a lot of resistance. This week we closed at all-time highs multiple days. So obviously that's wrong of what I was commenting on last week. So here's the lesson. It's okay to be wrong. It's not okay to stay wrong. So the way that I'm expressing myself to you is the same way that you guys have to be with yourselves when it comes to getting into a position that's just not working. So price is the ultimate thing that's going to determine, or the ultimate judge that's going to determine whether we're right or wrong. And right now, price is telling me that last week being a little bit negative in the video was probably not the right thing to do. That's okay. I'll probably be wrong again at some point in the future. But the goal is that when you're wrong, you realize you're wrong, you reverse course, you get the heck out, and you don't make a mistake turn into a disaster. So, with that being said, we did not remove any companies from the focus list this week, but we did add a company on the long side. And we see that the markets overall had a consolidation for basically the whole month of August. And then we started to break out in September. Now, September is interesting because you move into September, October, and a lot of people get nervous because of the seasonality trade. So, seasonality is nothing more than hey, markets have crashed. Basically, every time they've crashed, it's been in the fall, September, October. Um, and a lot of people realize that and they get a little bit cautious these months. So, seasonality, if it worked every single year, everybody would be billionaires. There wouldn't be a reason to work, right? So we all know that seasonality is an issue, but it's probably not something that I would take too serious as far as the trade goes. Secondly, as we look at this chart here, what we're looking at is this blue line between the two green days. This is a daily chart of the spiders or the S&P 500 ETF. This just means that it was trading ex dividend, so it really was trading at all-time highs at this point. Now, secondly, if you take a look at the weekly chart, you'll see that we have the all-time highs here, and we're just continuing to go in that uptrend. And I thought last week that this lower high here versus here was a negative sign, and I was wrong. It broke above it, and will continue to move higher. So let price dictate what's going to happen, not my opinion or yours. Okay. The other thing is that we started to see a little more insiders buy shares of their own company this week, which was interesting, especially near all-time highs. It's always good to see they're stepping in and buying more stock. The last thing I think I wanted to talk about was North Korea. So they're shooting missiles into the ocean. And it's not at this point whether North Korea shoots a missile over Japan into the ocean or not. At this point, I think the market would really react to some sort of retaliation from Japan or South Korea or the United States. So unless that happens, the market just continues to chug along. And it just seems like the dip on the news of a missile launch seems to get more shallow and more shallow every time they launch a missile because we're, as crazy as it seems, we're getting fatigued with missiles. I mean, it's they're not doing anything. They're not affecting business. They're not affecting earnings. They're just a nuisance. So, with a lot of other geopolitical events, they don't matter until they do. So right now, North Korea doesn't matter. At some point, it may, but what will happen is we'll see price affect what's going on. So definitely, definitely keep in touch with the price, what's happening overall with the market. I always monitor what the insiders are doing. As far as the noise goes, the North Korea, the Russia, the China, all that type of noise that pops up all around the world in different places, it's not as big of a deal as you'd think. And the only way that I think it truly affects the market is if we go to war, South Korea gets affected, Asia basically is on fire. So I don't know that North Korea wants that to happen, and I don't think that any of us want it to happen. So that's why it's probably not happening here. But we'll see. We'll see how crazy that man is. Um, so that's it. It's new highs. No reason to be bearish. Um, Markets don't crash from new highs. It's been proven over time. Markets trade sideways first from new highs before they start to dip lower. And just to kind of prove my point here, I'll show you back if we could scroll this all the way back to 2008 when we had the crash in 2008. So look here, we had new highs 6/1 2007. We started to go lower. We got 8/1 2007. We made a low. Then we started to come back higher. 10/1 2007, and then we started to drift lower, and then and this is what happens when I say it doesn't crash from new highs. What I mean is the high was obviously in October of 2007, and then things started to dip. But the crash didn't occur from there. We started to see some downtrending, and that will occur. And then a little bit of a pop back in 2008 in May, and then after May, when the summer came in 2008, that's when things just got silly. I mean, just real crazy, panicky. Basically, on this ETF, going from 130 down to 70, almost a 50% drop from basically 9 or September, which is what we were talking about earlier, September, October seasonality. So from September all the way down to March of 2009 was essentially the crash. So yeah, I'm not saying that we can't go down from all-time highs. I'm just saying that normally the panic stuff, the crash, doesn't really happen from straight from all-time highs where we're down 50%. It usually takes some time to get there, and the market starts to show weakness. So that was just one example. Um, what the heck? Let's go to 2000, and I'll kind of show you the same thing that I was talking about. So 2000 is the internet bubble. We're on the way up. We're kind of making a new high here in March of 2000. And then all of a sudden, we just make a little bit of a lower high in April and even a little bit lower in May. And then we try and test it again in August of 2000 and September. And then all of a sudden, September comes, October comes, and all of a sudden things start to deteriorate again. And once again, it didn't happen necessarily from March. It really started to trade sideways from March until September, and then we started to see the downtrend occur. So, like I said, we're at new highs. So the good news is we're probably not going to get a crash in a day or two. What'll happen, or at least what has seemed to have happened in the past, is that if this is the high, we'll get a lot of sideways action, then turn it into a little bit of a downtrend, and that will cascade into more panic. So for those people who are saying, "Hey, it's too high," I'm just gonna sit on the sidelines or not do anything because you're scared that it's too high here. I totally understand it because you're looking at where it's been, but who the heck knows where it's going? I certainly don't, and I don't pretend to. So good luck with everything. I just wanted to kind of go over those things. So I hope this helped, and I hope you guys have a great weekend. Thanks so much.